Hello students, this is another problem under hire purchase system. As I have explained you earlier, you have to read the problem properly first, then calculate interest, because in the problem they will not be giving as if which methods you have to follow for the calculation of interest. Read the problem properly, find out what are the information given, accordingly use the case and calculate the interest. After that you have to check whether it is a ledger account or it is a journal entries in the books of which parties. So here in this problem, the ledger account in both the parties, in the books of purchaser as well as the seller. Okay, first we will read the problem, find out what it is given, what are the information given, and accordingly we will calculate the interest, then we will go for the ledger accounts. Okay, so on 1/1/2015, Gopinath and company acquires a machine on hire purchase system terms where cash price of the machine 1,40,000 paid on signing the agreement. This is down payment. Balance was to be paid in 3 installment of rupees 20,000 each plus interest. So installment amount will be paid. Okay, 20,000 into 3, how much it becomes? 20 into 3, 60, isn't it? 60,000 plus 40,000, it is 1 lakh. Okay, plus interest, it means interest is not included in 20,000 rupees. Okay, so interest chargeable, outstanding balance, interest rate they have given 6%, depreciation rate it is given 10%. Calculate ledger accounts. Now before preparing the ledger account we have to calculate the interest. Now interest, to calculate interest we have to check what are the information given. Cash price, what is the cash price of the machine? It is 1 lakh rupees. What is the installment? 20,000 installment, but excluding interest. So installment is given but excluding interest, so it is a second case. We have to follow the second case to calculate the cost of interest. Okay, because interest rate is also given. Now how to calculate the interest is, first calculate write cash price. Cash price is 1 lakh rupees less down payment, it is 40,000. Outstanding balance for first year it is 60,000. Okay, now interest for the first year is 60,000 into 6%, 3,600. Now total installment for the first year it is 20,000 plus interest of 3,600. So the total installment for the first year it is 23,600. Okay, now next if you come to the next second year, what is the interest? 60,000 paid, 20,000 interest. So what is remaining? 40,000. 40,000 into 6%, it is 2,400. So what is the installment for second year? 20,000 is a installment amount excluding interest, plus interest added 2,400. So the installment amount is 22,400. Interest for the third year. Third year, what is remaining? 40,000 remaining. So 40,000, see here, 60 minus 20, 40,000 remaining. So 40,000 if you bring here, 40,000 minus 20,000 paid, the remaining balance is 20,000. Now 20,000 into 6%, you will get 1,200. So total installment is 20,000 plus 1,200, it is 21,200. So this is of 3 years installment amount and interest amount. This is the second case we have followed here, because cash price is given, interest rating is given, installment is given but excluding interest. So we have to follow third steps to calculate interest. Okay, to calculate interest we have to follow the second step to know the interest amount. Okay, it is very easy, but just write the cash price less down payment, then what is remaining on that, first calculate interest, then from the next year onwards deduct the installment amount, that is the principal amount. 20,000 minus 20, 60 minus 20, on 40 calculate interest. From next year 40 minus 20, on 20 calculate the interest. Installment amount will be 20 plus interest, here 20 plus interest, here 20 plus interest. Okay, now what we have to do is we have to open the account in both the parties. So we will open in the books of the purchaser, that is Gopinath company. The accounts will be the asset account, what is machinery account, then the higher seller account, then interest account. So 3 accounts we have to open. Now first entry for the purchase entry for the first year is machinery account entered to higher seller account. This is cash price. Now go to the higher seller here. Higher seller by machinery account 1000 rupees, 1 lakh rupees. Then on that, now next will be down payment. So down payment entry will be higher seller's account entered to cash account. So 1/1/2015 to cash account 40,000. After that the entry will be interest entry. Interest account entered to higher seller. The date will be ending date 31/12/2015. Now see the interest what you have calculated in the working note for the first year, it is 3,600. Next installment amount to cash, it is 23,600. That is 20,000 installment plus interest 3,600. So total installment amount is 23,600. Okay. After that charge a depreciation. Depreciation, you go to the vehicle account. By depreciation account, whatever the asset remaining 1 lakh into the rate of depreciation 10%. So 1 lakh into 10%, it is 90,000. Okay. Now you close the account, you will get the balance 90,000. Bring the balance to the next year to balance brought down 90,000. There also you will close the account as higher seller account. You will get balance carried on, balance brought down. Then come to the interest. By interest, it means to higher seller. So it is to higher seller account. The difference will be transferred to by profit and loss account. So both the amount total same 3,600. Now second and third year the same entry will repeat, the interest entry, installment entry and transfer entry, depreciation entry. So interest entry will be by interest account 2,400. Then installment entry to cash account 20,000 plus the interest to 2,400, it is 22,400. Then after that depreciation. Now depreciation is diminishing. So what is remaining now here, balance brought down on this amount to 10%. So 10,000, 90,000 into 10%, you will get 9,000. Okay. After that close the account, your balance carried on, balance brought down. Here you come and here also you close the account, balance carried on and balance brought down. Here you bring the interest this side to the higher seller account to 2,400, transfer to profit and loss account 2,400. Next is the last year. Last year also the same entry will repeat. That is the interest entry, depreciation entry, interest entry by interest account 1,200 to cash account, that is installment account 21,200. 20,000 is the installment plus 1,200 is the interest. So total will be 21,200 both the side. Next is now bring the interest this side, it is 1,200, transfer to profit and loss account. Go to there, by depreciation account. See here, by depreciation, what is remaining balance 81,000. 81,000 into 10%, it is 8,100. Balance carry down the difference, bring the balance. So these two accounts will be closed. The one account which will continue is the asset account. So all the 3 accounts you have to open together and 4 here how many accounts? 3 accounts you have to open together and transfer the entry. It will be easy for you for the transferring the entries also. So to remember the entry also it is easy. First year 2 entries, then remaining years 4 entry. Now in the books of higher seller, that is Gopinath and Company Limited, the higher seller you have to open Gopinath's account, okay, the purchaser account, and the one more entry account is interest account. Okay, so in the Gopinath entry, what is the entry? First entry is a sale entry. So the entry will be Gopinath and Company account entered to sales account, that is cash. Okay, that is cash price you have to write 1/1/2015, it is 1 lakh rupees. Next, down payment received. Okay, so down payment received means it is by cash. So first year you will have by cash for the down payment received, see 40,000 rupees. Again interest due, the entry will be Gopinath and Company account entered to interest account, see 31/12/2015. Okay, then Same way, by cash, installment amount received by cash 23,600, that is 20,000 installment plus 3,600 interest. So first year two entry, one is sale entry and down payment entry. The another year interest entry and installment entry. Okay, then transfer entry will be there. So this you close an account. Now again this year the interest entry 31/12/2016 to interest account 2,400. Again the installment paid by cash account, that is you receive the installment 22,400, that is 20,000 installment amount excluding interest plus interest 2,400, it is 22,400. Balance carried on 20,000, bring the balance to the next year, draw down. Next is the to interest. Interest amount is 1,200. By cash, that is installment amount received. So interest and installment both will come 21,200. 20,000 is the installment plus 1,200 is the interest. So 21,200. These account will balance both the side. Then there interest account you have to check. Now wherever you have written C interest to interest, it means by Gopinath company account. So by Gopinath company account 3,600. Balance transfer to profit and loss account. Every year you have to transfer to profit and loss account. Here also 2016 if you check, there is a to interest. To interest, so it will be by Gopinath company account 2,400, to profit and loss account 2,400. Total will be same. Then again write the third year you have always the interest. The interest is really the interest is 1,200. So write there 1,200 interest, transfer to profit and loss account and close this account. Okay. So in the books of the seller, the first year two entry, that is sale entry and down payment received entry. Next year onwards, then there will be interest entry, installment received entry, then the transfer entry. Okay, so this entry will continue. Interest account will close thereafter, then higher seller account or higher purchaser account will also be closed. So these two accounts you can open together and pass the entry. Okay, so in case of purchaser we have to pass for three books, that is a set account, higher seller account, then interest account. In the books of seller you have to open purchaser account and asset account. Okay, so first calculate the interest, then installment amount you will come to know, then pass the ledger account. Any doubts you can clarify. Thank you.